Alrighty, folks, as promised, this is your opportunity to interact with the one and only Mr. Dan Bird. This is open to our one rental at a time school community. If you would like to ask a question, I simply ask you to put it in the comments. Dan and I will go through our normal shtick, and then we will look at your comments in video number 2. Mr. Bird, what happened last week? And then, of course, I think we should talk about NVIDIA once again blowing out numbers and a 10-for-1 stock split. NVIDIA's rocking and rolling.
Yeah, I've been talking about that for a while. That I thought a split was coming. They normally don't do a split on their conference call though. They usually wait for the board meeting.
Okay.
But I guess this time they really wanted everyone to know. So the split will be effective June 7th after the close. So June 10th, you'll see whatever price it ends up at. And I actually talked about this in my newsletter this week. I said, you could buy it now, buy 10 share, buy 1 share, whatever, at 1,063 or something, I think it is. Or you could wait for the split because it's probably going to go to 1,100 or more before the split, and then buy it for 110.
Yeah. Yeah, I think we should talk. We haven't talked about splits in a while. It was obviously a big thing in the .com era, companies splitting. A stock split does nothing more than raise the number of shares and lower the price by some factor. It doesn't magically create value, correct?
Yeah, it doesn't create any value. So let's just take round numbers for NVIDIA. Let's say it's $1,000. On June 10th, if you had 1 share of NVIDIA, on June 10th, you'd have 10 shares. But instead of it being $1,000 stock, it would be $100 stock. Mm-hmm. So you've got the same value, same amount of money in your account, just that you have more shares.
Right.
So the question is, do you buy it now at $1,000, or do you wait? Do you buy 1 more for 1,000, or do you wait and buy 10 more for $100? The prices are the same. Just all depends on what you want to do. Now, what I think will probably happen, I actually have an order in to buy some more if it goes down to 1,000. Mm-hmm. It's like 1,063 or something right now.
So you have an order in at 1,000 is what you just said.
Yes, I have an order in right now. If it goes down between now and June 7th, okay, I will buy more at 1,000. I think it's probably going to go up because I think professional traders understand that that doesn't really add value. Mm-hmm. But they also understand they're going to have more shares once the split occurs.
They understand the retail investor, right? The retail investor will be attracted at $100, right? $1,000 is too much for me, but I'll take NVIDIA at 100.
Yes,
that's what they're playing.
That's the psychologically, but realistically, it doesn't matter. But you can buy 1 share at 1,000 or 10 shares at 100. Same money.
Yeah. Yeah, so it'll be fun to watch. I actually think a more interesting question. I think NVIDIA was the obvious choice for the next company to do a stock split. Yeah, there are others out there that may be coming as well.
Okay, so let's take a look at some of them.
Yep.
Do you have any in mind?
No, I just think there's Chipotle out there. There's lots of stocks trading at significant valuations, $300, $400, $500 a share, where historically they're in the double digits. And, obviously NVIDIA waited to have 4 digits, so 1,000. Now they're going to 100. But
yeah, CRM Salesforce is only $200. How about Booking.com?
Yeah. No,
$3,700.
$3,800. Perfect
Booking.
example of a company that could have a 10-for-1 stock split.
Yes. So let's look at a 2-year chart. So look at that, just steadily climbing. Wow. Starting down here at a paltry $1,600. $1,600. So it's more than doubled in a year and a half.
Mm-hmm. Yeah.
So
we got a question. Go ahead.
Why wouldn't they split? Why haven't they split by now? I mean, they were at a price higher than NVIDIA and they didn't split.
Well, it's really funny. I've been following stocks like you for decades, and it seems to go in cycles.
Yeah.
There was a cycle in the early 2000s where a stock split was a sign of strength. So everybody did it. Then we went into an era kind of Berkshire Hathaway. Don't split, just focus on value, keep going higher. I
Hmm.
think we're going to be rotating into an environment where stock splits are seen as a sign of strength again. I just think it's
Yeah, I
seasonal.
think, and I think it depends on the company. If the company wants more retail investors, then they will
Correct.
split.
Retail.
Booking.com, I think, wants more corporations or professional investors.
Mhm.
So they're not going to split that. And the investors know that it doesn't add any more value.
Right.
So,
Yeah. Institutions. Yeah.
right,
Be interesting to look
institution.
at the institution uh, percentage in different companies. I think you're right.
Yeah,
If it's institutionally owned, it doesn't matter. We did get a comment from someone in the school community asking about Broadcom. I haven't looked at that stock. You want to
sure.
take a look at that one just to see?
So yeah, that's another good one that could be
Yeah.
a split candidate. $1,400 right now.
Yeah.
I mean, this is one right here that would very likely, because it's in the same industry group basically.
Right.
This is one that could very easily just follow along with Nvidia. There's resistance right there.
Yep.
So
Yeah.
this is one that could also have a split coming. The
Yeah.
next earnings is June 12th.
Hmm. Oh,
Interestingly, this
right around the corner. Yeah.
yeah, and does that date ring a bell for you?
June
Does for
12th.
me. Does for me, big time.
No.
8:30 in the morning is the next CPI, and 2 o'clock in the
Oh
afternoon.
yeah. Yeah.
Two
Fed
o'clock in the
meeting.
afternoon is the next Fed meeting.
Oh yeah. June 12th is gonna be a really fun day.
Yeah,
You're
all on
right.
the same
Yeah.
day.
That's funny. You were asking about the future. I'm going, what happened June 12th last year? I don't remember. I was going backwards.
Yeah,
That's funny.
yeah. So yes, this is a good one to keep an eye on. Broadcom.
Yeah, there you go.
Broadcom in general has been a pretty good company anyway. A lot of their growth has been through acquisition
Yep,
of other companies.
sure. Cool.
Um, but that's a good one to keep an eye on. That could be the next one for splitting.
Yep, there
Now
you
let's
go.
talk about the other side of the coin, a
Okay.
reverse split.
Oh, yeah, those are no fun.
Right. That's when a company, let's say it's selling for $10, or let's say it's selling for $1.
Okay.
That's usually where you see it. And they have a 10-for-1 reverse split.
Hmm.
And all of a sudden it's now selling for $10.
Yeah.
But instead of 10 shares, you only have one share.
Yeah. I've seen again, historically speaking, reverse stock splits generally, in my opinion, are done to avoid delisting,
That's exactly right. Yeah.
and they generally don't end well. The boat is
No,
already sinking.
they usually, and actually this applies to both sides of the coin. Yes, they usually, there are rules with the NASDAQ for what the price of your stock needs to
Yep.
be over some period of time.
Yep.
It needs to be, I think I I want to say it's like $4 or something,
Something like that. Yeah.
but it has to be above that. So if it gets below that for too long, then they do a reverse split just to stay listed on the
Right.
NASDAQ. Otherwise, they go to the pink sheets or
Yep.
over the counter, and
Hmm.
nobody wants to touch them then.
Yep.
But in both cases, whether it's a regular split or a reverse split, if it's a regular split and it's a strong company like NVIDIA,
Hmm.
over time, historically, they go back to the price they were when they split.
Hmm.
So what that means is when NVIDIA splits, and if you had one share, now you have 10 shares, instead of $1,000, it's $100 over time. And I can't tell you how long that's going to be. It could be 5 years before it
Right.
happens, but
Yep.
it will eventually get back to $1,000.
Mm.
Same thing with a reverse split. A company that's selling for one and they reverse and now it's selling for 10, eventually will go back to one.
Yeah, the boat sinking. Yeah, very, very cool. Well, it's fun talking about stock splits, but let's get into the data. We had some record closes last week, I think.
Yeah, we did. Let's look at, by the way, anyone interested, I do a newsletter every week, and you can go to breakpointtrading.net and click on this button right here. We're actually going to look at the newsletter today too. So that comes usually on the weekend. I send that out. It's free. If you want it, you can just click there. You don't have to do anything. If you want to be reminded that it's available, then this is $0. We'll do that. It just basically registers your email. We don't share emails. so you shouldn't get spam from it. It doesn't ask for a credit card. If you want all the content on the site, it's $99 for a year and gives you everything. If you just want to take a look at it, the $15 monthly has a 7-day free trial. So your credit card won't get charged that first 7 days, and we'll send you a notice if you want to cancel it. But it's a way to just try it out for free for 7 days and just take a look around and see what's out there. So, and right on the main page, and there's no subscription required for this main page, for the home page. It's got these little charts right here. So the S&P 500 right there. So this was the 2021 all-time high.
Oh, wow.
This was the recent all-time high, and this is where we are now. So one of the things that I said in the newsletter is that all of the indexes, even though we had a big sell-off on Thursday, interestingly, the day after NVIDIA's earnings,
right,
market sold off, but the S&P and the NASDAQ actually still hung in there pretty well. They never broke below the support line, even with that big sell-off. Now we'll see what happens next week. Could be a different story.
Yeah, next week, just so you know, I'm sure you're working in here. We do get PCE Friday morning. That's inflation reading,
and GDP on Thursday,
and GDP. Yep.
Yeah, but PCE will be important.
Yep.
So here's the NASDAQ. NASDAQ actually,
wow,
barely even moved with that big sell-off on Thursday, and it's still well above its all-time highs. And the Dow is the one that had the most technical damage. It actually formed a double top where it hit the same resistance zone area. And by the way, with technical analysis, it's never an exact number for where that resistance is. It's a general zone,
right.
Kind of think of it as an area. But this was the previous high over here, so that created the resistance, and it went up to there and got reversed. So that's a double top. So the Dow is the worst looking one of the three. And the Dow is the one that actually may continue to go down.
Well, on your homepage, you also have Bitcoin. Why don't you throw up the Bitcoin?
Oh, yeah, sure. Yeah, Bitcoin right here. Bitcoin was trending in this channel for quite a while. There's the halving event that Bitcoin did. So I did a whole section on this previously, and I did it on my Zoom call last month, talked about what the halving events mean. But it was in this channel. It broke out of the channel, but now it's got this resistance right above it. So that's Bitcoin's recent highs right there. And it looks like it wants to break out of that. So if it breaks out above 72.5, then it could actually take off. And you look at a 2-year, it's right at the, right near the high. So there's that high right there.
Yeah.
But this is, it's not an all-time, it actually might be an all-time high.
I do think that's the all-time high.
I think it is an all-time high. I go back 20 years. Yeah, so there's what it looks like. Yes, that's an all-time high. So
yeah,
it looks like it wants to go back up and break that resistance at 72.5 and go back to new all-time highs. By the way, on my website, there's a chart that I created for Bitcoin that shows all the halving events. This is the one that I used when I explain what Bitcoin was to people. So there's the times that they've had a halving event. So what this means is Bitcoin, to create Bitcoin, you have to have a blockchain. You create a block in the blockchain. If you can create the next block, you are rewarded by Bitcoin. So you can see back here, and Bitcoin started in 2009. In 2011, it was $1. 2009, I think it was like 15 cents. What that means is you create a block in the blockchain and you get rewarded.
Right.
By, back then it was 50 Bitcoins. So you get rewarded by 50 Bitcoins. So in 2011, you got $50 for creating one block. In just a few months later, you got $30 for creating one block. And then all of this was built into Bitcoin, into how it was structured right from the very beginning. And the whole idea was to reduce the supply as it moved forward. Right. So on 2012 was the first halving event. So it went from 50 cents to 25 cents.
No, 50 Bitcoin.
or I'm
Oh,
sorry,
right,
25 Bitcoin. Yeah, sorry,
right,
25 Bitcoin. That was your reward
right.
for creating a block. It didn't mean it was money. It wasn't really intended originally to be money
Mm,
necessarily. It was just a reward to create a block in a blockchain.
hmm. Yep.
And then 2016, the next one, so that your reward was 12 and a half Bitcoin. In 2020 was the next one. Your reward was 6.25 Bitcoin. And the most recent one is right here on April 19th. And now your reward is $3.12. But you can see what the price of Bitcoin, but just basically through supply and demand
Hmm.
or nothing else. Bitcoin is really not, doesn't have anything behind it.
Hmm.
This is just purely supply and demand. This is a trading vehicle.
Yep.
So when
Very cool.
Bitcoin had a halving event in all these cases, initially it didn't really do much. Kind of went down, kind of went sideways. But then as the supply dried up, the demand increased, the price went up. Same thing happened there, and probably the same thing is going to happen from this one. So
Hmm.
we're now back up close to this all-time high again, and if it breaks through there, it's going to probably look like something like this, like it has
Mm.
before. It'll probably go through 100,000
Wow.
and just keep going. It's basically a trading vehicle. Now
Yep.
there are 21 million Bitcoin. That's the cap. There will never be any more than 21 million Bitcoin ever made. And right now it's at 19,690,000.
Yeehaw. I got my one. I have one. There we go.
Yeah. So I mean, you would think that's pretty close to 21. They don't have much more left to go.
Hmm.
But look at what the last halving event will be.
Yep.
2,140.
Yep. Okay.
So what's that, 100 years from now?
Hmm.
100 years, Bitcoin will continue to be created for another 100 years, but there will be fewer and fewer of them created. And actually, it might not even get there. This is
Mm.
really dependent on the power of the computers that are
Mm.
created. Because every time you create a new block, the way you create a block is through an algorithm from the previous block.
Mm.
And you have to create that algorithm, and when you do, you get rewarded by whatever 3 Bitcoin.
Got it.
But to do that, it requires more and more computing power
Right.
in order to create those next blocks. So that's why there are fewer and fewer Bitcoin being created, because it aren't computers powerful enough to do it. And in fact, these days, back here it was just some guy in a garage with a
Right.
piece, right? Creating a
Yep.
Bitcoin, and he got $1, you got $50 for creating one block. 50 Bitcoin for creating one block. And today the computers have to be so powerful that there
Hmm.
are only a few Bitcoin miners out there that are actually doing it these
Yeah.
days.
Very, very cool. Well, what else did you see last week? Did you see any
So
kind of pivots from discretionary to?
yeah, so that's actually a big concern. I talked about it last week,
Yep.
and um, that's that's what I call the intermarket relationships.
Yep.
So just discretionary versus staples. These are things
Ooh,
that we would,
look at that.
right? Discretionary are things we would like to buy. Staples are things we have to buy. XLY and XLP are the ETFs. So you can invest in those categories just by buying the ETF. XLY, these are the weightings. These are weighted categories, by the way. So
Hmm.
XLY, 24% of it is Amazon, 13% is Tesla, and 9% is Home Depot.
Got
Those
it.
are the top three weightings. And in staples, this kind of gives you a sense for what these mean. Procter and Gamble, Costco, Walmart, and Coca-Cola.
Mm.
So what you like to see when the market's going higher, and that's the gray line back in the background here, that's the S&P. What you want to see when the market's going higher is that discretionary is outperforming staples. People are buying things that they like
Mm.
TVs and new cars, things like that.
Right. Yep.
Not necessarily putting a lot of money into soap and toothpaste and
Right.
deodorant, although I hope they still do that. But when you see that something like this, that means staples is outperforming discretionary.
Mm.
So this many times often occurs before the market starts to decline.
So
And I
again,
can't,
what this chart is showing you is the market is going higher, the gray line, but
yeah.
the consumer or staples is getting more attention.
You can actually relate this to the consumer. You can think about this as where the consumer is putting their priorities.
Yeah, and we've seen that in some of the earnings. I mean, Ross Stores, for
Right.
example, right, has had great earnings, raised guidance, but that's because the consumer is seeking value. Where Nordstrom's, not so much, right? We're starting to see the consumer get cost conscious.
Yeah, interesting. You should say that. I'm going to actually go to my newsletter for this topic. And there was a lot of stuff in my newsletter this week.
Always
Ton of
is.
content. Ton of content. But I got an email from a subscriber that said, "Hey, take a look at this article about Target."
Yep.
And the article basically said, Target missed, so retail stocks are having a hard time. Does that mean that the consumer is starting to roll over?
Mm.
So the first thing I did was I analyzed Target versus Walmart.
Okay.
Because they're kind of in the same space, right? So I
Sure.
wanted to see how Target was performing versus Walmart. If it's true that it's the industry, not just the company, then they should both be performing roughly the
Correct.
same.
They would both be down, right?
Right. But in this case, now this is a relative chart. So this is comparing Target to Walmart. Okay. Target's the first parameter, Walmart's the second parameter, which means that if the chart is going down, it means Target is underperforming Walmart.
Yeah, I did not see your report this week, but I talked about this on the daily financial news. Just because, again, in this case, Target is suffering, Walmart could be picking up share. And there's actually multiple articles talking about Walmart
Yeah.
picking up consumers, higher income consumers.
Right. Yes. So this is comparing Target and Walmart. Target's on the left. These are 4-year charts. So Target's on the left over the last 4 years. Walmart's on the right.
There you go.
You can see consistently for an extended period, Target has been underperforming Walmart. And the blue one at the bottom of this, it shows how they do versus their own peers.
Right. The whole industry. Yeah.
Yeah, their own industry group. And again, Target is significantly underperforming its peers, and Walmart is outperforming its peers. So my conclusion, and this is the retail industry group, the retail ETF, XRT. So if you wanted to buy just retail, the whole thing, you could buy this ETF. And if it was true that, the retail industry is suffering, then we should see this going down like it did in the bear market in 2022. Right? But that's not really what's happening.
No.
It's going higher, but not rapidly, just slowly going higher. Basically ever since the October low in the market. All right. So far through this analysis, I would say it looks to me like it's just a Target problem.
Right.
It's not a retail problem. It's not a consumer problem. It's a Target problem. All right.
That's fair.
However, just coincidentally, another thing I subscribe to, Real Investment Advice, spent their whole newsletter this week talking about the consumer and PCE that's coming up next Friday. All right. So there's retail sales. Still, the dash line is basically a trend line. It's still above trend, but you can see how it's gone sideways and it's getting ready to cross below trend. Okay. Hasn't yet, but strength of the consumer is all important, as you know, 70% is related to the consumer. This is PCE versus real GDP. So this is really what's coming up next week, both PCE and GDP. And the red one is the advanced real retail and food services sales. And see how it's below zero.
Yeah. And again, folks, when he says real, that means adjusted for inflation.
Right. And there's the recessions. You can see You can see what that red line in particular did just before and during the recessions. So before the recessions is when it started to fall off.
Right.
And during the recession, it drops dramatically. Right now, it's starting to decline.
Interesting. Okay.
All right. CPI is the blue line. It's coming down, and black is PCE. So this might, and this is the really concerning one. 90 plus days delinquent. You know, that's creeping up now as well. And these are age groups. So 18 to 29 is the blue one, 30 to 39 is the red one. So that's peak earning years.
Yep.
Delinquency on credit cards and auto loans is rising sharply. So that's a warning sign for the consumer, right? This was really interesting. Is inflation a myth? This talks about the Biden administration, but it's politicians in general. He said, if you take a look at what people have, they have the money to spend. It angers them and angers me that you have to spend more. It's like 20% less for the same price. That's corporate greed. That's corporate greed. And we have got to deal with it. And that's what I'm working on. Well, the data says otherwise. It's not corporate greed. As inflation was picking up, corporations were making more money, but as inflation's coming down, they can no longer continue to raise their prices. In fact, they have to drop their prices.
Yeah.
That's one thing the Target said as well.
Yeah, 5,000 items. Walmart's following suit. Amazon's following suit. We're about to have some retailers cut prices. That's
yeah. Oh yeah. And I think it will affect the inflation rate eventually.
Yeah.
This is the percentage of inflation passed on to consumers as measured by profits. So yes, it went up right here, but it's dropping right now.
Yeah.
Considerably.
Cool.
So interesting article. My take on this whole topic is, yes, Target itself has a problem, and the consumer is showing signs that it's going to have a problem, but it's not yet.
Right.
So I think all of this, and I've talked about this in last week, I think all of this is going to point to the end of this year, the market being higher. Next year, we're going to have problems.
Yeah, 2025. You've brought that up a couple of times. Well, Dan, do me a favor one more time. Show your website. Folks in the school community, we're going to go into video number 2 here shortly, where you can ask questions. You can ask about your stocks. You can ask about anything you would like. Just put them in the comments. We will go to there momentarily. Dan, you're amazing.
Breakpointtrading.net. If you want the free newsletter, just click on here and you can get it each week.
Very cool. Thanks, buddy.
You bet.